And I think there are some trends that are like shifting things a little bit. I think a lot of people have been, a lot of people that have been in startups are starting to, I don't want to say, they're not, I don't want to say it's like they're disenfranchised by it, but I mean, it's not a lot. It is a lot like a lottery ticket. Like the failure rate is so high. Even when you succeed, in a lot of cases, it's like an acqui-hire, or it took so much fun. Like you had to have a down round because you didn't hit your metrics at a certain phase, and as a result, you got heavily diluted. And when you exit, it's not the quite the windfall that you expected, or whatever it is. It's like there are a lot of outcomes that are not failure, but are also not, going public or having the $1 billion exit or whatever it is. And I think a lot of those outcomes are a lot more common than people think. All of which is to say, I think a lot of people get enamored with like the romantic aspect of joining a startup and think that it's this like sure ticket to like generational wealth. And in a lot of cases it's not. And so there are I think as people are realizing that, I think they're opening their minds up to maybe alternative ways that give them similar types of like exposure and access. So like one example I think is like the emergence of like SMB Twitter, for example. Like there's this growing community of like basically people that want to acquire other small businesses. And a lot of them are like digital businesses with like acquire.com and things like that. So like buying an existing SaaS product and doing more of like a PE type of model where you're not trying to chase $1 billion outcome, but you're like, I think I can see some levers here I can pull to, get maybe a 3x kind of outcome, or own it in perpetuity, or whatever it is. I think the emergence of that, I think, is a net positive, because it's another avenue for people to kind of explore owning a business that doesn't necessarily have the stakes and the artificial urgency that running a venture-backed startup might have. So
I think that people would be really surprised at the price point that you can actually sort of acquire some of those software teams and projects for,
and how you finance it. I mean, again, like I have a personal aversion to debt, but like there are things you can have a seller note, you can have upside for them, where they kind of roll it back, or let it ride a little bit. There's platforms like Pipe that will use the annual recurring revenue or the monthly recurring revenue as collateral and give you funding. There's a company called Boople, I think, that is kind of similar, where they collateralize it based on the assets of the business, so you're not having to do like a personal guarantee necessarily. There are some really clever alternative kind of approaches to financing a deal like that, to your point, like your out of pocket is not nearly what people assume it would need to be. And so, yeah, I think that's a super exciting development in the last couple of years that just seems like it's becoming a lot more common.